Hi guys, and welcome back to Marantz. Marantz, plenty of information, a little bit of motivation, a whole lot of truth, no financial advice. This is a preview video for GameStop's earnings, 2023 quarter three. And I've been making videos about GameStop 2.5 years, following the earnings every time, trying to guess the revenue, trying to guess the profits, and been telling everyone for years they're headed towards being profitable because they already are. I already know this part, but I'll have to show you guys. But we'll keep this going. This is going to be a longer video than normal, and I hope you guys like it. So come with me. By the way, it is my birthday today, and here I am making videos about GameStop because it's what makes me happy. So I'm going to take myself off the screen. So here we go. So 2023 earnings preview, and that's Rantz. It's me, myself. I don't know if that really looks like me, but shout out to NFT Trove. He made the artwork there, so thank you so much. First, let's look at the chart. This is GameStop's chart. Obviously, you saw it blow up back in January 28th, 2021. And I put there, this is how ready I am. I'm ready. I've been ready. I know today it ran up because the CPI numbers that came out were lower than expected, which was good. And because of that, you're going to see a run in the market itself. So everything's booming today. And GameStop's no different. It's going along with it. So I think GameStop's currently trading around $13 and some change. Previously, this was done yesterday when I made this whole video. I put together these slides. You'll see here that the average GameStop stock price for the last year has been $20.27. So when people tell you that it's all-time lows, it's falling to pieces, it's not even 50% down from the annual average. I know a lot of us have been in it for a long time. A lot of people are about higher than this price point. But if you keep averaging down, then obviously you're at a really good spot right now to buy in. Personally, that's what I feel. Right, that's what I've been doing. I'm not telling you guys to do it because I don't give you guys advice. I just tell you what I've been doing for this longest time. I give you a lot of information, and then you make your choice decision. But yeah, I was trading it around like $11.98 yesterday. I know a lot of people bought it. I bought it in the 11s. It was awesome. I couldn't be more happy. But that's the chart. Next here, this is going to be in the upper left-hand corner. That's Michael Pachter. I thought we should always just keep an eye on him and let him know that we know who he is. But he's a big... he frowns upon GameStop. I'll just put it that way. He's a bear. I'm going to show you the chart here. So this is going to be every quarter if we're looking at the chart itself. And as I look at this, the part that I want to pay attention to is going to be the operating income. If you've seen it, they were in the positive in quarter one and or quarter four, I apologize, of last year, $46 million, $58 million loss, and then 16.6 loss. The operating expenses, too, have come down. That's your SG&A. If you look there, SG&A expenses, they went from 387.9 last year, this quarter three. We were at 322 last quarter. So you can only imagine where we're going to be headed. And it just looks great. This whole chart looks great from what I can see. The biggest thing that I liked off of this whole deal was that the gross profit went up. That means our margins went up. And if margins can stay flat for this next quarter, I'm telling you right now, it's going to be fun. So let's go ahead and see what else we have. This is T12. Now, Dan Olson here, he doesn't believe in GameStop. He doesn't believe it's going to be profitable. But I'm letting you see what the T12 looks like every quarter. Over the last 5 quarters, it's gone in one direction. Of course, GameStop was at a negative $500 million, then negative $500 million again, then chop that in half from one quarter to the next, all the way down to where it is today. And it's on the verge. It's on the verge of getting there, flipping the script, and I think we can do that. This quarter, I feel we can have a $100 million swing again, and that's what I see. So that's the trailing 12. And now here you go, GameStop cash on hand. Now people would tell you, this is the narrative, and I know there was a video out there by Illuminati. There was another one by a young lady named Hannah Reloaded. I believe that's her name, or Reloaded Hannah, I don't know. But everyone's trying to give you this information to tell you that GameStop is burning cash. And I would show you the uptrend in cash. And I know it's going to be via offerings. People can say, well, it's because they offered shares and then they got a big stack of cash. But the whole point that I'm making here is that you would see a cash burn. Okay, so from where they offered shares, which is the biggest candle on this, they offered some shares and then they would burn off, which they have been doing, and then they went up again. And you see this rinse and repeat because they're not actually burning cash. So they're trending up on cash. They have been. The narrative that they don't have cash is ridiculous, or that they burn it slowly. That's just not true. They're doing exactly what they're supposed to be doing, and it's a gradual climb. The climb's there, so no cash burn. Shareholder equity is at an even right now. meaning they're not diluting you and the shareholder themselves. They did that on purpose, and that's what that spike down was. Shareholder equity was getting killed right there about 2018 all the way through to the bottom here. That dip right there, that's going to be COVID. And then you're going to see the spring all the way up over the offering of the shares themselves. So this right here, this chart tells me that GameStop doesn't need much. They're holding ground pretty tight, so it's good. Here's another metric. So all these metrics, right? The current ratio is going to be the assets versus liabilities. Long-term debt is going to be debt, obviously, versus the capital on hand that they have. So just look at every metric you want. So right now they're at a 1.87 on current ratio. That means the debt versus liability side, or I'm sorry, assets versus liabilities, 1.87, almost 2x is great. That's a good number. Long-term debt, basically zero. They're at 1% of all their debt is long-term debt, which is nothing. It's that French loan. Debt to equity ratio is at 2%, meaning there's no debt whatsoever on the shareholder equity. I already told you that. This is phenomenal, guys. They were once at 0.3, now they're down to 0.7. Long-term debt, they were once at 0.24, now 0.024, now they're at 0.018. They've come down about 5 basis points, 6 basis points in a span of 6 quarters. So it's all headed in the right direction. That's my point to show you all of this, is that they just keep going. Now, here's the margins, right? Gross margin, I told you, 26%. That's massive. Holy hell. If GameStop can come in at around 25%, 26%, that range, like the whole year, it's over, guys. It's all over. They're positive, period. But you had those inflationary numbers of 2022, 2023, the 21%, 24%, 23%. You were trying to figure out how you annualize on the inflated dollar and the supply chain dollar is what I would call it. So if margins are coming back, that means people are getting stable and people are finding out their happy medium as far as what they want to spend. And go ahead and look at the operating margin. When you look at operating margin right here, they were at negative 11% just a year ago, and they keep coming down. 9.4, 8, 2, they were positive there, 4, and now 1.4. So they're there. They're right where they want to be, and I don't know why I said percent. It's just an X on that. So my point is this company is headed in the correct direction. With that, the market cap currently at $3.82 billion. That's actually gone up today because the price went up, which was great. But the revenue itself, revenue is almost $6 billion in sales, and you're going to tell me it's worth less than half of that, or just around half. It's not right. It's not the right price, and I know that, so that's why I tell you, for me, it's a great buy. Now, if you look at this chart right here, this is GameStop profit margins, and I want to talk about this because the trailing 12 gross margin, operating margin, and the net margin, everything is headed in the up direction. If you see this, they hit the bottom, they hit that valley. That's going to be your inflationary dollar, but as you can see, it's peaking right back up. So as long as it can go back up and hit the high 20s again, oh my goodness, guys. Ryan Cohen knows it, you know it, and I know it. It's going to be phenomenal. Now, GameStop's gross margin historical data shows you that they're at the 23% right now on gross margin. They were in the low 20s all of last year. That's what I'm telling you. That supply chain issue, inflationary dollar. But they've been at 24s before. If you go ahead and look at right here, this is the net profit margin historical data. They're getting closer to flipping it. They're right at almost zero. Once you go zero and you go positive, that's where you want to be, guys. So you'll see that these dollars, the trailing 12 revenue at $5.81 billion is much higher than 2021. So we're headed towards the right direction, and we're holding that dollar. But here's the crazy part: this has no stimulus money. There's no kid out there with his $1,600, $1,800, whatever they were getting those days spend. This is actual people shopping, so they're carrying over, and the margin's holding. GameStop net profit margin in the past, this is the past, guys, 2017 all the way to 2014, they averaged 4% margin. That's what they averaged. So if they could do 4% on the 5.81, you're still going to look at $20 to $40 million of profit. That'll end up jumping all the way up to, that's per quarter. You can get up to $200, $300 million, period. We'll find out where it all goes. But I'm just letting you guys know they're headed in the right direction. Okay, and we'll know when we get there. But you're looking at around 4% profit is what you want off of the sales they do. Then we can scale. Right here, the boy who cried, Ryan Cohen. That's everybody, right? Good job, guys. Stock price, $12. Book ratio, 2.92. I told you guys that's basically a third of shareholder equity, meaning 30% of the share is equity. As you can see, we're at 415, and that was 222 last quarter, and I was already excited at around 20%, right? So to have that be that, the book value itself, I know that at times, way back in the day, guys, I'll show you. This is when it was a buy, right? GameStop was a buy to everyone that knew how to read a damn balance sheet. This right here, 2017 through 2020, look at the ratios, 0.84. That meaning they had more cash on hand than the share price itself. So their shareholder equity exceeded the share price. Whenever you see a 0.84, a 0.64, a 0.69, a 0.40, that's crazy. Anything below 1 means you're buying cash for cash. You need to go buy it. Like, that's just me. Like, that's the way I do my math. So when the share price in 2020 was 96 cents and DFV's telling you, he's like, there's no way this stock can be $4, man, when they have cash on hand worth $8 or shareholder equity worth $8. There's just no way. The math didn't work out. So that's why everyone was rushing to the table and buying it. And I'm letting you know, the pre-2021 numbers of, hey, I wish I could have bought it back then, your ratio was 2.05 on that. Look at it again. We're at 2.92. We're really close to that price. So if you keep knocking the price down, it's unbelievable that you're going to get essentially 50% equity per share. And of course, this guy says, Ryan Cohen's a loser. He's a failure. Thanks, Brian Susie. We appreciate you. Now, GameStop current ratio. Now look at the current assets, guys. They have on the top line current assets, and then you have the current liabilities. But if you look at that chart at the very bottom, that says the ratio. We have never, and I'm just telling you in the history of GameStop, you can see the history all right there. We've never operated at this leverage position that we have today. Meaning GameStop is infinitely in better shape than they ever have been in their whole history, because the ratio itself means, are you leveraged? Is private equity involved in trying to force you to do the things you don't want to do? No, not right now. And as you can see, the dots are all headed in the up direction at the very end here. And there's a reason for that, because it's GameStop versus everything else. Now, right here, we're going to look at the quick ratio. Quick ratio is current assets minus the inventory versus the liabilities. And the quick ratio is telling you that they're doing well. They're at 1.24, holding steady. I like it. When I look at the historical data of the GameStop quick ratio historical data, you'll see before the actual, blast from the past in January of 2021, they were under 1. You never want to be under 1. That means you're over leveraged at that point. But they were setting themselves up to get murdered, and it didn't happen. Thank goodness for GameStop. Now, net loss. Net loss last quarter was $2.8 million. That was a net loss. But if you look here, it says foreign currency translation adjustment of $1.4 million in the positive. If you look at last year, quarter 3, they had a negative 16.6 in the negative on that, because the conversion ratios, the dollar's not weighted the same during 2022. It was crazy. Inflation, you name it, that's what they had to take into consideration. And this is why they shut down all operations in Europe. Well, not all operations, but all operations in Ireland and most of Europe. But you'll see what I mean by that. Here's Evolution Capital and Larry Chang. There's Larry and Ryan. Yeah, these guys are awesome, huh? Okay, so net sales of 760, and you'll see that they had an operating loss, and this is last year, okay? Last year, 2022, they lost $87.9 million just in America alone. This year, just what was announced last quarter before this, they had a flip of around 221 million. So if you look at it from 211 million, I apologize. So you look from 232 operating losses all the way down to 221. What a drastic increase by GameStop. I think people need to talk about this, that they're not losing as much as they did before. They were losing $200 million the year before. Now they're at $20 million. And that's because, you know why. I told you the hidden value, the hidden numbers there, SG&A stuff. So as we look across here, you're going to find out, and what I wanted to show you with here was the operating loss from 2022 to 2023, from 261 all the way to 75 million. The net loss, everything is going to be from $266 million last year, all the way to 53 million. So they actually are a flip of $210 million in the right direction, and people should be talking about. You should actually get credit for that. That was my point, but we'll see. All right, SG&A. If you guys look at the SG&A, same thing as what I've told you, is that the SG&A has decreased by 171 million. Watch this. I want you to hear about this number. And then in addition to that, they have cut, as you would call it, cut or interest, They made $21 million from marketable securities. So the flex, right? The flex was $250 million, I said, but then $220 on the side. Watch, I'll show you right now, just so you guys can see. 261 or 266 and 53, right? That's $213 million swing. That's what that is. $213 million. All right. The cuts are 171, and then the interest that they've made off of marketable securities is 21.3. That's $192 million. That's not 213. So the other $23 million that they've made is based off of running the business better, but not cuts. It's off of margin. It's off of doing the right things when no one's looking. So I'm telling you guys, it's more than just cuts. When they say, oh, they just cut, they're cutting their way to profit. That's not true. They're actually operating better by around $20 million over the last 6 months. Those incremental changes are going to be the difference. Now, what they've done with their equity down here, uses of capital, you'll see here that they went ahead and bought the marketable securities $300 million worth. I think that interest is going to show because I'm going to go over this chart with you right here. So during the fourth quarter of fiscal year 2022, we committed to a plan to sell our property in Europe, consisting of a warehouse, building, land, and other property and equipment with a total net carrying value of $7.1 million. They did close that up for $13.1 million, okay, the transaction. It closed in quarter 3 of 2023. The numbers should settle on the books this quarter. Additionally, they sold more properties for $9.6 million, carrying the value of $9.6. So I'm not even going to count the 9.6 because I don't know if that was already in quarter 1 or quarter 2, if it was on the books. I couldn't find it per se. But in the small print at the very bottom, it says that they're shutting down Ireland. And when they shut down Ireland, SG&A should come down significantly. That's all happening quarter 2 and this quarter as well. There are some one-time charges with severance packages and things of that nature. So I predict GameStop sales last year, this same quarter, were $1.186 billion. I think they'll have a 5% increase. Now, I'm just being fair and coming in at 1.23. Traditionally, GameStop has had a 10% difference from quarter 2 to quarter 3. And I'm talking about annually over the last 10 years, they've averaged 10% difference. I'm not even going to do the 10%. I'm literally going to keep it at around 5 in that range. But I'm just telling you, if they cut down the SG&A to $347 million, that is a 5% decrease, or not 5% decrease. That's $25 million decrease, but it's a little bit more than last quarter. Okay, last quarter they came in at 322. I'm giving you this little bit of room to be the difference. Okay, 347 is what I said they're going to come down to from 387.9. Right here, here's the math. That's what they were last year, 387.9. I think they're going to come down to 347. But remember, that's a big drop already. We're already at a $40 million drop. But remember, last quarter, they went to 322. I can see them getting down in the 320s again, but that's $20 million extra dollars. I'm going to put that in my back pocket in case it does happen. I'm going to look at gross profit. Gross profit last quarter was 305. Okay? I think they're coming in at 325 on gross profit. That's just the way I do my math based off of this number here and the margin of 24%. You'll get to 325. Now, from $347 million is what their SG&A was cut down to. You're going to subtract the gross profit. It's going to leave you. And you can do that another way. You can go to gross profit and subtract the 347 if you want to do it that way. It doesn't matter. I know the math I'm doing. It equals $22 million loss for the quarter. Now, let's add 28.1. 28.1 million. And why do we add the 28.1 million? Because, and goodness gracious, whatever happened to my screen here, I'll never know. I had this all lined up for you. Because they're going to make 15 million off of marketable securities interest. Additionally, the 13.1 from this sale over here in Europe, that's 28.1 million. So on the 22 that they lose operationally, they're going to make 28.1 million over here. It's going to be $6 million worth of profit, guys. That's what I see for this quarter. Now, remember, I gave myself 20 million on SG&A, a flex here, 24 extra million. Or 25, I apologize. I'm floating it. I'm floating 25 million on SG&A in either direction. It can go down, it can go up. I don't care. It's not going to, though. Like, I have a really good feeling about the number. I can only tell you guys how many times we've predicted the number right here. It's been more than most. But to go ahead and lose $94 million last year, 94.7, I think that they will go positive $6 million for the quarter. And I think that'll be the $100 million flip that you see. And if they're going to go even higher than that, I can see it going because of the SG&A coming down another 20. I can see it in a flip of $25 million worth of profit this quarter. That's how I've done the math. I've looked at it every which way, and I don't think we're wrong here. Now, what's happening out there? This is one of the things that are happening, and never mind these guys because they're not buying Bed Bath & Beyond, but this was a letter that was given to GameStop telling them that they need to be more detail-oriented on their SG&A line. So we'll see that this quarter. It states it in there. The company respectfully acknowledges the staff's commitment to include qualifications of factors cited for the changes of financial statement lines in the future filings, being that the company's Form 10-Q for the fiscal year ending in October 28th, 2023, the company will include to the extent applicable enhanced disclosures qualifying the impact of each individual material factor that contributed to the overall changes in the line in accordance with items 303 regulation, blah, blah, blah. What does that mean? That means that they're going to be more in detail on the SG&A and what's in it. I already told you, they hide so many things in there, and I'm okay with it because they've been sandbagging numbers for the last 2 years. And I think they surprised Wall Street. They had a double beat, and they had a $100 million swing last quarter, and nobody saw that coming. Well, we did, but Wall Street didn't, and that's why they went ahead. SEC said, hey, we want to know more. What's going on over there? Don't worry, this is going on. Remember, guys, $100 million flip. I have $6 million worth of profit. It's going to happen. I can see it, and that's with numbers falling flat, essentially. You'll see what I'm talking about. Now, what else is happening? Well, Meet Kevin deleted his YouTube channel or all his videos. He wanted to erase all the track record of him saying AMC is going to the moon or him using people for that reason. It's okay. Now, I saw Hannah Reloaded. She's making comments and videos about me. I won't even take the bait. They want me to take that bait. It's not going to happen. GameStop's short volume, as you can see, yesterday was one of the all-time highest days at 74%, 0.4 of the total short volume reported. And that just tells you they manipulate pricing. They knock it all down. You can do whatever you want. I'm just going to keep buying what I love. Last part here is going to be the digital store has been announced. If you go online, you get discounts on digital products. Get up to 10% off on all that. I bought a new hoodie today. That was pretty cool. Forget GameStop. Now, I've been hearing this headline for a long time. Seeking Alpha told you the day of January 28, 2021, somebody went and put an article out there and says, forget GameStop, get into AMC. You can imagine how that worked out for everybody. Forget GameStop, buy these 3 stocks. Forget GameStop, buy these 5 stocks instead. Those have always been the headlines. Forget. We've been attacked on the channel as well. I mean, they demonetized the channel. They've attacked me. They've done everything they can. It doesn't really matter because... we got this. And the partnership with Immutable and Ubisoft, those are key, all for GameStop, if everyone knows the origins of it. So, with all of this said, guys, and I'm just shouting out numbers left and right so you guys can see the trend, the uptrend in the stock, right? That's the way I see it, and I've seen it like this for a long time. These numbers are going to be great. So, even if they fall flat on sales and the margins come down a little bit, or if the SG&A is up a little, it doesn't matter. I'm telling you, it doesn't. There's nothing they can do. It's going to go positive, and this quarter will be positive, and next quarter will be positive. If it goes negative, it's because GameStop did something to hinder their own balance sheet, which I've seen them do before. I'm not mad at them because I know exactly the way they're running their business. But nope. I've got $6 million, $100 million flip, all the way up with the potential to be $25 million worth of profit this quarter. Call me crazy. Call me anything you want. Just don't call me home late for dinner. Hey, it's my birthday. I got to go chill. GameStop. Can't stop, won't stop. GameStop. Hope you guys liked the video. Hope you got the info. Enjoy. Peace. Millionaires. Peace. Millionaires. Peace.